All right, good morning and good evening. Welcome back to the analysis sessions here. Start of the week, we will begin with gold and also touch base with the Dow Jones and Euro USD chart setups. But primarily, we will want to discuss gold to begin the week. And once again, thank you everyone for watching it either live or recorded mode. And feel free to send in your comments and any other requests if there are any. Thank you again, Vivek, for your kind comments. No need to, I mean, this is a passion and I'm doing it from my own will, so you need not thank all the time. That's absolutely fine. I would rather thank you to keep watching and your support. Okay, let's get started off with gold first. The wave counts and the structures have been discussed, so I'm not redoing it, but 5 waves have been done since the 2022 September, lows around 1800 levels. And mind you, it's still not complete at a larger degree. This particular top, I mean, if we start beginning, if we start off from 1800 lows, 1600, sorry, that was minor degree wave 1, 1800 was minor degree wave 2, and then an extended version of the third wave, which normally is the case, followed by a triangle wave 4, and yet another extended wave 5, pushing prices all the way towards 5600. Now, these 5 waves are of a minor degree, completing potentially wave 3 of one larger degree, that is primary or extended, expanded, sorry. Let me just, intermediate it is. So one larger degree is intermediate wave 3. We are working potentially on an intermediate wave 4, or I mean, irrespective of the degree, this could be wave 4 of a lesser degree, but what I'm trying to say is the trend is still not complete. So we've got to be a bit careful, and that's why I've been a bit non-committal, unless the last time when we went short with a stop around 5100. All right, but as far as the structure is concerned, the uptrend is intact. It still has at least one high, possibly two highs to go, and it remains to be seen if for 4000 levels bottom has been formed, but we still cannot rule out, because the Fibonacci ratios are pointing to much lower levels, not these ones actually, that 1.618 Fibonacci extension, which is pointing just around, just below 4000 mark. We cannot rule out that possibility yet, but overall it's a tricky situation where should we commit more on the short side, or should we wait for the bottom to be carved here? That's the big question. All right, but this is the entire larger degree structure. 5 up, one larger degree wave, 3 potentially complete. It's working on an ABC correction and a minor degree again. And let's flip the chart to a 4 hour. This is where the action is lying. This is where the boundary is. This is the boundary which is being worked upon. I still have my accounts well placed as wave 1, 2, but before that let's go through the overall structure. Now from the top around 5600, our goal is working on an A, B, C corrective decline at a larger degree. That's a minor corrective wave, where wave A terminated around the 4200 mark or 4400 mark. Wave B went all the way back towards 5400, and if it is correctly done, then we've got wave 3, which is probably being worked upon. Ideally, it should unfold into 5 waves, and we have marked wave 1, 2, and 3 at a minute degree. Potential wave 4 carved out just below the 61.8 Fibonacci retracement, around just shy of the 4800 mark, and a huge uh, impulse drop thereafter. I think we should be looking into that as well. I think last Wednesday or last Thursday it was, when we had a neat little impulsive drop, 1, 2, 3, 4, and 5. It is very clear on the 15 minutes chart though. Here you are, wave 1, 2, let's do it again, wave 1, 2, 3, and then you see a triangle A, B, C, D, E, and the drop here. So that is minute wave 1 in the orange, which was done I think last Thursday before we went off for the holiday weekend, extended weekend I would say. If this is wave 1 and wave 2 might have just completed or just terminated around the 4700 mark, or maybe one more high is left. That's exactly the 61.8% touch, you see there. Or it might just print one more high, because if it is 3, 3 and a diagonal is being worked upon, if the diagonal is being worked upon, then we've got wave 1, 2, 3, 4, and possibly one more leg higher, which would just barely touch around the 4700 mark, and then ideally reverse sharply. Right. Now this structure, this bearish structure, would stay intact till the time prices are below, let's say, ideally below 5400, but also it should not go. If that is wave 4 being carved out, then it would not enter the territory of wave 1, which is around 5000 mark. So we've suggested stop loss around 5010, just above that mark. But ideally, okay, it can go and test this wave 4. But if it's 5 down thereafter, then it should not break that high as well. So maybe we can shift the stop loss lower around the 4800 mark or 4810. Uh, Remaining on the short side, here's the trade setup that we might want to continue for a while. Remain short from the 4750, 4800 mark. we can bring the stop lower to just about 48, 48.50. Ideally, it should be around 50.5010, and potential target, we would say 4100 and 30 or 4000. It's still possible for the decline, but I think it's, since the larger degree trend is up, you never know, okay, when it can stop. And one more thing, it has bounced at the channel line support, so both possibly remains. We cannot rule out any of them till the time prices stay below the 5000 mark. So while you're doing this, please remember that we might be in a counter trend. We are in a counter trend actually. So too much of aggression on the short side is not recommended. Okay, and if we go by the path or trajectory, then it be wave 1, wave 2, uh, wave 3 lower, which should bring prices all the way closer to 4100, and then possible wave 4 and 5. This should be the ideal trajectory for the next move in gold. Alright, so keep an eye on the 4800 mark, the 61.8% touch of wave 3. You see wave 3 was extended 1, 2, 3, 4 and 5. So that's entire boundary, third wave extension, and wave 4 has taken its own time. A break below 4555, that is wave 1 potential marked here, would accelerate price action lower. Right, so we'll be watching that as well. Okay, so that is the story in gold, but overall the trend remains, the larger degree trend remains up. So if you are inclined towards a larger degree trend, then you might not want to trade this aggressive uh, short, and sit on the sidelines for a while maybe, and try and pick up and fetch closer to the 4000 mark. That is another strategy, more safe, more conservative, and more towards the larger degree trend, which is up. All right, one more humble request. These are just for the education purpose. Please do not construe any of the discussions here as any form of encouragement to trade or speculate in the markets, specifically in the non-regulated region like our country, India, where on black and white, the Reserve Bank of India clearly mentions that trading spot international markets or CFD, or sending money abroad in form of margin, is strictly prohibited unless you are buying stocks uh, under the liberalized scheme. It is allowed, but margin trading is absolutely not allowed. All right, let it be very clear, sir. Okay, dollar, Dow Jones. I think the structure remains intact for now. And the trajectory also remains intact for now, where we have a potential impulse lower being carved out. The third wave was extended as it should be, and if we have completed wave 5, then an ABC corrective rally is underway, which should take price action towards the 48,000 mark. Possibly the range is between 47 and 48,000. Selling on rallies is recommended, with the potential stop just above that high 51,000 mark. All right, don't get complacent that the trend is resuming on an upside. It is not, sir. It has much, much, much room on the lower side. We'll bring up the lower targets. We're still waiting for price action to reach towards the 61.8% mark, or maybe a little bit higher than that. Generally, when there is the second wave before the beginning of the huge third wave, it may go a bit deeper. All right, possibly 78% or sometimes even higher than that. So it might take its own time. Wave 2 of a minute degree, which might be uh, underway right now. So we'll have to have some patience. Possibly April series might go through in this corrective rally. All right, and finally Euro USD. Quite interesting setup here. We have suggested last time. I think we suggested going long. We also brought up a bullish scenario where you can see the correction might be complete with an ABC decline just around the 1.14 mark, and this could be wave 1 of 3 of a larger degree, wave 2 of 3 correction, and then again 1 and 2 possibly. If it is correctly done and if it is actually happening, then the third of third wave would be a fierce rally from these points. Bottom line is 1.14, so the risk is about 150 points from here. But I think we've already suggested longs earlier, and but our stop loss still remains at 1.14, and the targets remain open, possibly above 1.2 highs going forward. All right, sir. So that brings us to let's bring it a pause here, and we'll be back again tomorrow with discussing these three units again. Until that time, once again, thank you for watching. Thank you for being subscribed. Thank you for passing the word. If you're liking what you're seeing it, and until tomorrow, good luck to your trades, and please take care and God bless. Goodbye.